Uh, so good evening, everyone. So let's
Good evening,
begin.
sir.
Let's begin with today's session. So the first half an hour of the session will be about chapter number 8, journals. Okay, so there are only 2 or 3 questions left to complete the clock. We'll start with ledgers. Clear? Okay. Hope you hear me properly, guys.
So your video is stuck in one. Your voice also.
Yes, sir, you're getting stuck sometimes. Sir, you're not stuck, sir.
Okay. It is, guys.
Sir, it's fine now.
Yes, sir, yes.
Yes,
Okay.
It's
Now
fine.
also you get stuck, sir. I just before.
Sorry. Can you be little louder?
It's fine now, sir.
It's
Yeah.
fine now. Okay. So let us let us continue this session with this network. Let us see, or else I will try to change to mobile network, but it may not work for very long. Let us start with this actually. Okay. So chapter 8 journals. Let me start sharing my. Let me open my notes now. Okay. So we completed till illustration 15, right, guys? Okay. Let's start with illustration 16. So before that, let me discuss few concepts with you. Let me share my screen with all of you. Okay. Take page 8.39 of your TS Grewal, guys. Open page 8.39 of TS Grewal, chapter number 8. Okay. So there are few adjustment entries that we are going to discuss. And all of these adjustment entry are relevant when we discuss our chapter, the second last chapter, final accounts. All this will be repeated again actually. Okay. The first one is closing stock account. There is an accounting entry that is passed for closing stock. The accounting entry is closing stock account debit to trading account. I will not give you much concept on this because this has to be discussed in the second last chapter. When we discuss the final accounts, we will discuss this in detail. At this moment, you may not be able to understand the entire concept. So for now, you can just remember accounting entry for closing stock is closing stock account debit to trading account. Clear? Okay. The concept part we will discuss when we discuss the final account chapter. Am I audible to everyone, guys? I'm taking a
Yes, sir.
confirmation because I am having a bad
Yes.
network today. So I'm taking confirmations
Yes.
in between. Yeah, please acknowledge it. The second one is on outstanding expenses. We have discussed this a lot of times. Whenever there is an outstanding expense, it means we have incurred a liability. That means we have availed the services, but we are not able to pay for the service. It can be outstanding rent. It can be outstanding salary. Accounting entry remains the same. If it is rent outstanding, accounting entry will be, what will be the accounting entry, guys? I have discussed this many times. What will be the accounting entry for rent?
Rent account debit to outstanding rent account.
Fantastic, Yash. Rent account debit to outstanding rent account. Okay. Why rent is debited? Because expense is increasing. Why outstanding rent is credited? Because liability is also increasing. Okay. So I will just write down here. My screen is visible to all of you.
Yes, sir.
Yes,
Yes,
sir.
sir. Yes.
Yes, sir.
Adjustment entries. Adjustment entries. The first one was closing stock. For closing stock, the accounting entry is what, guys? Closing stock account debit to closing stock account debit to trading account. I am not going to discuss the concept behind it because it is too early for you to understand this concept. We will discuss this concept when we discuss the final account chapter, the second last chapter of class 11. Clear? Not now. Okay. Second one is outstanding expenses. Outstanding expenses. For outstanding expenses, the accounting entry is what? Expense account debit.
To outstanding
Expense account debit to outstanding.
Expenses.
It can be rent, it can be salary, it can be anything. Okay, why expense? Increase in expense has to be debited, and increase in liability to be credited. Everyone is aware. I'm very happy that you have picked up the modern rules so well, all of you. Okay, fantastic. Next is prepaid or unexpired expenses. Prepaid or unexpired expenses. Okay. For prepaid, the accounting entry is prepaid account debit to prepaid expenses account debit to expenses account. Prepaid expenses is an asset. Asset increase means debit. I will give an example for this. Expense decrease means
Credit.
Okay. See, what happens in case of prepaid is, take a classic example of insurance expenses. Insurance is always paid for a period of 12 months. If I pay an insurance in the month of January to December, the period is 12 months. Assuming I am paying my premium of 1,20,000. 1,20,000 I am paying a premium for 12 months. In this Jan to March, what comes in one financial year, April to December comes in next financial year. So Jan to March is 3 months, comes in one financial year, 9 months comes in another financial year. So I can show only expenses for 3 months. I can show only expenses for 3 months, right? I cannot show the expenses for entire 12 months because 9 months is coming in the next financial year. So what I do, the first entry that we pass is insurance expense account debit 1,20,000 to bank account. This entry will be passed in the month of January. In the month of January, this entry will be passed. Now my question to all of you is 1,20,000 my expenses for the period, for the financial year which is ending in March? Can I record entire 1,20,000 as expenses? Answer is no, because only Jan to March will pertain to this financial year. Only 3 months will pertain to this financial year. 9 months will pertain to next financial year. So what I will do, my 9 months expenses, prepaid expenses, I will debit it to prepaid expenses. 9 months. How much will be 9 months expense? 90,000. It will be 10,000 multiplied by 9 months. Will be 90,000. And I will reduce my insurance expenses by 90,000 because entire 1,20,000 is not my expenses. So what will happen by doing this? 1,20,000 minus 90,000 automatically 3 months expenses will go to that year. Clear? 90,000 is my asset because it pertains to next financial year. So I am reducing my expenses by 90,000. I am calling it as prepaid expenses. Asset increase means debit. Asset increase means debit. This is my asset because this expenses will be recorded in the next year. Asset increase means prepaid is always asset. Asset increase means debit and expenses decrease means credit. Any doubt, guys?
No, sir.
Okay. So whenever there is a prepaid expense, prepaid will always be an asset. Accounting entry will be prepaid expenses account debit to expenses. There is another way of recording that. Let's not discuss that. There is another way. Practically what we do, there is another way of recording it, but let's not discuss that. For now, you can only understand prepaid expenses is an asset and accounting entry will be prepaid asset account debit to expenses account. Clear? What will go to prepaid? The expenses which is pertaining to financial year, not for the current year. Whatever is pertaining to next financial year will be going as prepaid expenses. Clear, guys? Any doubt?
No, sir.
Fantastic, guys. The next one. The next one is accrued income. Accrued income or income earned but not received. Income earned but not received. Very interesting concept. Accrued income or income earned but not received. Okay. Take an example of a fixed deposit. The business has deposited 1 lakh in a fixed deposit. The terms of fixed deposit is they will pay only interest every half yearly, only they will pay the interest. That means if you are depositing in the month of January, you will not get the interest in March. You will get the interest in after the end of June. After 6 months only you will get it. But since you have put a deposit in the month of January, you are entitled for the interest for the period Jan to March, right? It is interest earned. You have earned that interest, but you cannot receive that interest. When you will receive that interest, you will receive that interest only in the month of June. Clear? Clear? So at times what happens is we earn an income, but we cannot get that income now because as per the condition of fixed deposit, I can receive the interest only after 6 months. Clear? So interest earned but not received. Accounting entry will be what? Interest earned is accrued interest is my asset and income I have to record. Even though I am not receiving this income, still I have to record that income for the period Jan to March, right? Still I have to record this income. So my accounting entry will be what? Very simple, guys. Accrued interest account debit to interest income. Okay. Increase in asset to be debited. Increase in income.
Increase in income to be credited.
Increase in income to be
Credited, sir.
credited. So accrued income is an asset. Prepaid expenses is also an asset. Remember this concept, guys. Accrued income is an asset. Prepaid income is also an asset. Prepaid expenses is also an asset. Clear, guys? Accrued income, what is the concept?
Yes.
I have earned that income. But I cannot receive that income. Okay, that means my income will increase and my asset will also increase. Accounting entry is accrued interest account debit to interest income. It can be any income. I'm just giving an example of interest. Any income which is accrued, that particular income, accrued income account debit to income account. Clear? Okay, in fact we can change the wordings. Instead of interest, I can use the word income because it can be any income. Accrued income account debit to income account. I just gave an example of interest. Clear, guys? Next one, interest accrued and due. Interest accrued and due, same accounting entry, guys. Interest accrued and due is, it is already due and it is available for me to receive also. It is due and I can collect that amount also. Clear? In case of accrued interest, it is due but I cannot receive it. Interest accrued and due means the interest has also accrued to me and I can also receive that amount. Next is income received in advance. Income received in advance, guys. Income received in advance. Income received in advance. I have not given any services, but I got my income. I got my fees without giving any services to you. I have collected without giving any services to you. Okay? What it means? It means until I give the service to you, it is a liability to me, right? Because
Yes,
you can always ask that money back. Okay? So income received in advance is always a liability. So I have to, what accounting entry I will pass rent received account debit. For example, if it is rent received account debit to income received in advance. What is the concept? Decrease in income to be debited. Why decrease in income? Because I cannot record it income today because I have not given the service. If I have not given the service, can I record as income? Not possible. Okay, decrease in income has to be debited. Why liability to be credited? Because increase in liability to be created. Increase in liability to be created. Clear, guys? The next one is depreciation. Depreciation we have discussed a lot of times. Depreciation is nothing but decrease in the value of the asset. Decrease in the value of the asset. Accounting entry is very simple. Expense account debit to asset account. The name of the expense is depreciation. Clear? Depreciation account debit to fixed assets. Depreciation account debit to fixed asset. Why depreciation? Increase in expense to be debited. Decrease in asset. When there is a depreciation, my asset will decrease. Clear, guys?
Yes, sir.
Okay. Last one is amortization. See, amortization and depreciation both are same concept. Amortization and depreciation both are same concept. Amortization we use for fixed assets, which are tangible assets. Amortization we use for intangible asset. Intangible assets like software, something which we cannot touch, we use the word amortization. Concept wise, both are same.
Sir, your video has stuck on.
Is for
Sir, your voice was not coming.
it got stuck. Yeah. Can you hear me now?
Yes, sir.
Yes.
yes, sir. Now,
Okay.
yes, sir.
Okay.
Now you.
So in case it gets stuck, please wait for 15 to 20 seconds. I have a poor network today, but let us wait for 15 to 20 seconds in case it gets stuck, guys. Fine. I don't have an alternate network. Okay. Yeah. Amortization is same as depreciation. For tangible assets, we call as depreciation. For intangible assets, we call it as amortization. Clear? Concept wise, both are same. Amortization account debit amortization account debit to intangible assets. Intangible assets. Concept is same. Increase in expense to be debited, decrease in asset to be credited. Clear, guys? Depreciation and amortization both are same. Depreciation is for tangible assets. Amortization is for amortization is nothing but I'm reducing my asset over a period of time. That is called as amortization. English meaning is when something is getting reduced over a period of time. Amortization. It's a term. Meaning is same meaning as depreciation. Same meaning as depreciation, guys. Any doubt? Okay. Now, with this background, we are good to solve illustration 16. And with respect to concept, all the concepts are over in this chapter. Now we can take up the last few questions of this chapter and we can conclude this chapter. Okay. Yes, am I audible now?
Sir, when you told the meaning of amortization, you were stuck in.
Okay. Amortization is nothing but the English meaning of amortization is something.
Again, sir, you stuck on.
So the English meaning of amortization is something which is spread over a period of time. That is called as amortization. It is nothing but for depreciation, we call it for tangible asset. Amortization is the term that we use for intangible asset. Meaning is both amortization is another meaning of depreciation, another wording for depreciation. Clear, guys? Any doubt? Clear, guys? With this, let us take illustration number 16, guys. Illustration 16, let's take. I'm sure all of you will be in a position to answer this. Illustration 16, guys. Interest due but not received, guys. Interest due but not received. What is the accounting entry? Interest due but not received, 5,000 rupees.
Accrued income to income.
Yes. Interest accrued account debit, interest account. Okay. Date is not given, I think, in this. Yeah, date is not given, so we can use serial number column. Interest accrued account debit to interest income. How much is the amount, guys? 5,000. Being interest due but not received. Any doubt?
No, sir.
Next one. Out of the interest for the year ended 31st March 2026, 3,000 is due for receipt. 3,000 is due for receipt. When something is due for receipt, same accounting entry, interest accrued account debit to interest account. Okay. Interest accrued but not due account debit to how much? To interest account. Amount is how much?
3,000.
3,000 and 3,000.
3,000.
For both, the concept is same. Okay. First one is interest due but not received. Second one is interest earned actually. Accounting narration, same narration what is given in the question, is due for receipt. Interest due for receipt. Third one is what, guys? Salary is payable to staff. Salary is payable. That means it is outstanding salary. Salary account debit to outstanding salary. Accounting entry is salary due to staff. Narration is being salary due to staff. How much is the amount, guys?
25,000.
25,000. Fantastic. 25,000. Next one. Out of the rent paid this year, 10,000 relates to next year. 10,000 relates to next year. When something relates to next year, that is called as
Prepaid.
prepaid expenses. Fantastic, guys. So, and accounting entry is prepaid account debit to
rent.
To rent
sorry,
account.
prepaid rent account debit to rent account.
To rent account.
How much?
10,000.
10,000. Please help me with the amounts, guys. Being
Being
prepaid rent for
amount, sir.
Being
Rent
rent
paid in
paid in advance.
being rent paid in advance or prepaid rent for next year, whatever.
Okay.
All the narrations are correct.
Right.
Okay. Next one, guys.
Provide 10% depreciation on furniture costing 50,000.
Yes. Let me explain first. Provide 10% depreciation on furniture costing 50,000. Everyone knows this entry, guys. Everyone knows this entry. Depreciation
Yes,
account debit to.
Furniture.
Fantastic, guys.
Furniture account.
Depreciation account debit to.
Debit to furniture, sir. Furniture.
Yes. Amount, guys. Amount. Please help me with the amount.
Amount is 5,000, sir. 5,000.
Amount is 5,000. Being depreciation
Provided on furniture.
okay. Next one, guys. What is the next one?
Goods used in making furniture. Sale price is 2,000 and cost price is 1,500.
Yeah. See, yesterday we discussed this concept. Whenever we try to create an asset, anything which is related, any raw material or any input which is required to create an asset, that becomes the asset itself. Yesterday we were discussing about building, right? We used cement, we used mortar, cement, mortar and all is required to create a building, right? So what accounting entry we passed? Building account debit to bank account. Here, what we are using? We are using goods we are using to create a furniture. Imagine a showcase. Imagine a showcase is getting prepared. So whatever inputs are required to prepare a showcase, everything will become furniture. Like it can be a labor salary or it can be a raw material, it can be will be debit. Furniture account debit to bank account. Accounting entry will be what, guys? Furniture account debit to
Furniture account debit to
bank account at cost
bank
price.
account.
Whatever goods I am using, I will be using that at cost price. So 1,500 and 1,500. narration is being goods used to create furniture. Clear, guys? Clear?
Yes, sir.
Fantastic. Seventh, the last one. Received commission of 10,000 by check. Received commission of 10,000 by check, half of which is in advance. Half of which is in advance. Not the entire thing, only half of that commission is received in advance. Okay. So I can put two accounting entries for this. Bank account debit. How much I am receiving? 10,000 rupees.
10,000, sir.
Out of that, my income.
No commission received.
My
Commission received.
my commission is
Received.
to bank account debit to commission received. I can put 10,000, and one more entry I have to pass. What I have to pass?
Commission received account debit to commission received in advance.
Fantastic, fantastic, very good. To commission received. Out of this 10,000, 5,000 is not my income for this year. 5,000 is not my income for this year. So I have to reduce my income of 5,000 rupees. So first accounting entry will be bank account debit to commission received with the full amount. And after that, I will reduce my income. Decrease in income, because this pertains to next year. Decrease in income to be debited. And it is my liability also. It is my liability also. Increase in liability to be created. Increase in liability to be created. Fantastic. Very good, Pranav. Okay. So two accounting entry we have to pass. Bank account debit to commission received. This is increase in asset. This is increase in income. But 10,000 is not my income. Only 5,000 is my income. So I'm reversing. I'm reducing my income by 5,000 rupees. Clear? Any doubt?
No.
Okay.
No, sir.
Fantastic, guys.
No,
So
sir.
commission received account debit to commission received in advance, guys. Any doubt?
No, sir.
Very good, guys.
No, sir.
Next one, illustration 17. Small illustration only, 17. Let us do this. And after that, we have two more questions to wind up this chapter. Illustration 17. Okay. The first one just now we did actually. Depreciation on furniture. Just now we completed. Whenever you are making journal entry, always remember the format, guys. Narration also, I am doing it because I want you guys to ensure that narrations is captured. But otherwise, for me, it is not important in the class to write all the narrations. But still, I am doing it so that it becomes a habit for all of you guys. Clear? For you, it is very important because you have to score marks. For me, teaching narration is not important. I can also teach without narration. Clear? But still I am writing every narration so that it becomes a habit to all of you guys. Clear? Yeah. Provide 10% depreciation on furniture. Same accounting entry, guys. What is the accounting entry?
Depreciation account to furniture.
Debit to furniture. How much is the amount, guys?
500.
500. 5,000 into 10%, 500. Being depreciation provided on furniture at the rate of 10%. Clear? Next one. Goods used in making furniture. Okay, let me Okay, guys. 1 second. In the previous question, there was goods used in making furniture, right? Goods used in making furniture. We are not paying in cash. So we debited furniture account debit to bank, which is wrong. It will be furniture account debit to purchasers. Whenever goods are used, in the last class we discussed, whenever goods are used, we credit what? Purchases account. Are we paying any cash for that? We are not paying any cash. Existing goods to make furniture. So furniture account debit to purchases account. Okay. Just now it struck me when I saw this again. Goods used in making furniture. Same accounting entry. What is the accounting entry, guys?
Furniture account debit to purchase account.
Yes. Furniture account debit. We are not purchasing any new goods. We are using our existing goods. Furniture account debit to
Still, purchase, sir.
purchases account. How much, guys?
1,500, sir.
1,500. Being
Goods costing rupees 1,500 used in making marriage.
yes, you can write the entire narration. Absolutely right. Third one. Received commission. Same question, guys. Just now we did half of that received in advance. Two accounting entry we passed. One is bank account debit. Bank account debit to
Commission received account.
yes, to commission received with the, but entire amount is not my income. Entire amount is not my income. Half of that only is my income, guys. Half of which is in advance. So I have to reverse the income. I have to reduce my income. Accounting entry will be commission received account debit to
Commission received in advance.
yes, to commission received in advance. Two accounting entry we have to
Sir,
pass. Yes. Yes, Aditya.
I think my network on your voice was not audible.
Okay. I think it is audible to others. Your network is bad?
I think so, sir. I think so.
Okay. Fine. Then go to a place which has a better network, because I think everyone else is responding. So I think my network is better now.
The room which I am sitting have the most network. Thank
Okay.
you.
Okay. Fine. Okay. Then adjust with the class today. Anything that you miss, you can see the recording.
Okay, sir.
Being commission received, half of which is in advance, half of which is in advance. Here being commission received in advance, guys. Any doubt?
No, sir.
Okay.
No, sir.
Next one is very interesting. I have discussed this before also. Allowed interest on capital. We discussed during accounting equation. Interest on capital. A proprietor, a businessman is giving business. Now the businessman is asking for interest from the business. I am a businessman. I am asking from the business, I am asking interest. I am asking the business to for the business for or income. Business has to pay to the proprietor. Business has to pay to the proprietor interest on capital. For the business, it is expense or income. Simple question, guys. Business has to pay interest to the proprietor for the capital. For the business, it is interest or expense?
Expense.
Expenses. So interest on capital account debit. When the business will pay interest to the proprietor, capital of the proprietor will increase or decrease. Now think from capital point of view. Proprietor's capital will increase or decrease. It will increase, because the capital 1 lakh capital will become 1,05,000, right? When interest is added to the capital. Clear? So for the business, interest on capital, expense increase means debit. Expense increase means
Debit.
debit, and capital will also increase in the business. For the
Capital
business,
increase means credit, right?
yes,
Credit.
capital increase means credit.
Credit. Credit.
Akshay, it is clear concept?
Yes, sir.
Okay. For the business, we have to see from the point of view of business. For the business, interest on capital is an expense. And when interest on capital is paid, capital will also increase. Proprietor's capital will also increase because proprietor is going to receive interest on the capital. Clear?
Yes, sir.
Okay, fantastic. So 5,000 and 5,000. Interest on drawing, opposite concept. Interest on drawing, opposite concept. Proprietor is telling, I want to draw 1 lakh rupees. Business is telling, boss, you can withdraw 1 lakh rupees. But as a business, I will charge you interest. As a business, I will charge you interest. So for the business, interest on drawings is an income or expense for the business?
Expense.
It's an income. And when proprietor will pay interest on drawings, the capital of the proprietor will increase or decrease?
Decrease. Increase.
Increase.
Decrease. No, businessman is paying, the business is taking interest. When the business is taking interest from the capital, capital will decrease or increase? Business is interest. Proprietor making a drawing of 1 lakh rupees. I am a business. I am telling you can draw 1 lakh rupees, but as a business, I will charge 5,000 rupees interest from you. So when 5,000 interest from you, income of the business will increase. It becomes an income for the business, right? And what will happen to the capital? Capital will only interest has to be paid. Clear? So accounting entry will be what? Capital account debit. Capital account debit to interest on, opposite concept of interest on capital. Just the opposite concept of interest on drawing will always, drawing reduces capital or increases capital?
Reduce.
So interest on drawing will also reduce capital, right? You are charging on the drawing, you are charging interest. That means when drawing is reducing capital, obviously the interest on drawing also will reduce capital, right? Clear?
Yes, sir.
When additional capital is introduced, capital increases. When interest on capital is given, capital increases. When drawing is made, capital reduces. Hence, this is okay. How much it is? 600 rupees. Okay. Any doubt, guys?
No, sir.
Being
No, sir.
interest on capital allowed. Being interest on capital allowed. Being
Interest charged on drawings.
interest on drawing received or charged. Clear, guys?
Yes, sir.
Any doubt?
No, sir.
So this completes my discussion on chapter number 8. Only the last concept which is left in chapter number 8 is opening entry that I will discuss. So far, any doubt, guys? So far, any?
Sir, your video is talking, sir. Sir? No, sir. No, sir.
Yes. What of it?
Okay. Let's move to the last concept of this chapter, which is opening entry. And what I have told you guys, I'm repeating again. If all the illustrations are over, what you are supposed to do?
We have to try all the problems, sir.
Yes. Please ensure all the practical problems are also covered. From your side, the chapter will be over when all the practical problems are covered. We will, once I discuss the remaining two illustration, we will just have a glance at all the practical problem just to see whether anything different is there in any of the practical problem. Okay. Yeah. Opening entry. Very easy concept. See, this is a very practical concept also. Whenever from 31st March, whenever accounts are carried forward to 1st of April, from 31st March, whenever accounts are carried forward to 1st of April, an opening entry is passed by all the business. All the companies, they pass an opening entry. Okay. From 31st March, when the accounts are carried forward to 1st of April, all the business, they have to pass an that opening entry is to carry forward all the balance last year has to be carried forward to the next financial year, right? From 31st March, we have to carry forward the balances to 1st of April. One important network today. Am I audible, guys?
Yes, sir.
Yes,
Yes,
sir.
sir. Yes, sir.
Give me a moment, guys. Let me check my mobile network, how it is working. Try to change to mobile network. Am I audible now, guys? I've changed my network now.
Yes, sir, you're audible.
Yes, sir.
Yes,
You're
sir.
audible, but your video is stucking, sir. Always
Okay,
stucking.
now I have changed my network, guys. I think now it will be stable.
Sir, but audio is okay, sir. But the video is stucking, sir.
Okay, no problem. Then manage with today's class. I have only two networks at home. I have tried changing both the networks. So if video is getting stuck, please try to bear with it.
Okay.
Okay,
Okay, sir.
fine. So the last concept that we are discussing is opening entry. Why this concept is useful? Whenever the financial year ends on 31st March, all the business, they have to start their accounts on 1st of April. So this opening entry concept is used on 1st of April. All the closing balance will become the opening balance on 1st of April. All the closing balance will become the opening balance on 1st of April. All assets will be debited. All assets will be debited. All liabilities will be credited. All capital will be credited. So accounting entry is very simple. Accounting entry, opening entry, accounting entry is assets account debit, assets account debit to liabilities to capital. Assets account debit to liabilities to capital. This is the opening entry. Generally, this is passed on 1st April by all the business. Clear? My screen is visible to all of you?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Yes.
Accounting entries, assets account debit to liabilities to capital, individual assets account debit. That means I have to debit furniture separately, building separately, to individual liabilities to capital account, assets account debit to liabilities account to capital account. My accounting entry will look like this. Opening entry, assets furniture account debit. This is nothing but accounting equation. Furniture account debit, building account debit, debtors account debit, cash account debit, all assets, whichever asset is coming in the to creditors, to bank loan. I'm just naming few assets and few liability, not everything, to capital account. Clear? So for example, if this is 50,000, 10,000, 20,000, 30,000. So my total of assets is how much? This is nothing but accounting equation. This is creditors is 20,000. Sorry, creditors is 20,000. Bank loan is 50,000 and capital will be 40,000. My assets will be equal to liabilities plus capital. This is an accounting opening entry. This is an opening entry. In opening entry, one thing you have to remember, you will never find income and expenses in an opening entry. You will never find income and expenses in an opening entry. Why? Because when we prepare the profit and loss account, second last chapter, we will discuss the profit and loss account. All income and all expenses will become either profit or loss. That profit or loss gets added to the capital. So whatever profit I made in the last year will be inside this capital, Income and expenses are never carried forward to the next year. Income and expenses are never carried forward to the next year. Only assets, liabilities, and capital are carried forward. Clear? Income and expenses either will become profit or loss that gets included inside the capital. If profit, my capital will increase. If loss, my capital will decrease. I will never carry income and expenses as an opening entry. Clear? Whatever income and expenses related to last year will stay in the last year. It will never go to the next year. Only assets and liability and capital, will go to the next year. Clear? Very, very important concept, guys. Very, very important concept. Only assets, liability, and capital goes to the next year. Income and expenses for that year remains in that year only. At the end of the year, it will either become a profit or loss. If it becomes a profit, my capital will increase. If it becomes a loss, my capital will decrease. 1 year's income and expenses will never go to the next year. Right? But asset, 10-year-old asset also will be an asset in the current year if it is still not depreciated. I would have purchased a building 20 years back. Still, it will be an asset. So assets are carried forward every year. Assets are transferred from 1 year to another year. Liabilities are transferred from 1 year to another year. Capital is transferred from 1 year to another year. But income and expenses becomes profit or loss in the same year, and it is adjusted in the capital. If it is a profit, my capital will increase. If it is a loss, my capital will decrease. Income and expenses are never carried forward to the next year. This concept you will appreciate and understand when we discuss final account. That is the time when you will understand this concept better. Clear? For now, opening entry is very simple. It's an accounting equation. All assets are debited, liabilities is credited, and capital is credited. It is nothing but an accounting equation. Assets equal to liabilities plus capital. Clear? Debit all assets, credit all liability and capital. that is called as opening entry. Clear? And this opening entry comes from the balance sheet also. In balance sheet also, we see only assets, liabilities, and capital, right? In balance sheet, what do we see? We see only assets, liabilities, and capital. So whatever is there in the balance sheet gets converted as opening entry. Whatever is there in the balance sheet gets converted as opening entry. Income and expenses are never there, will never be there in the opening entry. Clear? Fantastic, guys. This concept is very, very important. You will realize when you start going to further levels, you will understand the importance of opening entry. Okay, let us take an example now. Question now. Take illustration 18, guys. See, opening entry can be easily prepared by a balance sheet. In fact, my accounting entry is given here itself. All assets will be debited, liabilities and capital will be credited. Simple. So whatever is in the asset side, debit it. Whatever in the liability side, credit it, including capital. This is illustration 18. Okay, illustration 18, guys. Opening entry. Okay, format will remain the same. Always, whenever we pass a journal, format will remain the same. Now tell me, guys, what is the opening entry? How shall I pass it? Debit all assets. All assets are given: land and building, computer, furniture, inventory, debtors, cash in hand, cash at bank. Everything will be in the debit side. Everything will be in the debit side. And this opening entry will be passed on what? On what date? 1st April 2026. When we start the financial year, we pass this entry always. Okay, all assets will be debited. What are the assets I am having? Land and building. All the assets will come from my balance sheet. Land and building account debit. Next is computer. Computer account debit. Next is furniture account debit. Next is inventory. Inventory is nothing but stock. Inventory account debit. Next is debtors account debit. Next is cash in hand and cash in bank. Cash in hand account debit. Cash at bank account debit. Help me with the amounts, guys, of all the debit. How much is building?
1,10,000.
1,10,000. Computer?
20,000.
Furniture?
10,000.
Inventory?
70,000.
Debtors?
20,000.
Fantastic. Cash in hand
5,000.
and cash at bank?
25,000.
25,000. Fantastic. To what? To what? To my
Capital account.
to my bank loan, to all the liabilities, and finally will be capital. Or I can put in the same order also. To capital, to bank loan, creditors, bills payable, outstanding expense. To bank loan, to creditors, to bills payable, and to outstanding expenses. Okay, my 2,60,000. Capital is how much?
1 lakh.
1 lakh. Bank loan
50,000.
50,000. Creditors
90,000.
90,000. Bills payable
10,000.
10,000 and outstanding expense also, I think 10,000, right?
10,000.
10,000. Okay. Clear, guys? Any doubt?
No, sir.
What is the narration?
Sir, sorry, sir. My
Balance-
network didn't complete. My
No
network
problem.
didn't work, sir. That's why I connected on phone in my laptop.
Okay. Being assets, liabilities, and capital brought forward. Brought forward. This is, see, nowadays, this opening entry is passed by the system automatic. Whatever is the balance, closing balances in the trial balance and balance sheet, automatically system will pass the opening entry. It is automized now. But when we used to do it manually, we used to pass this entry. When we used to carry it from one accounting year to another accounting year, we have to pass this accounting entry. Very, very important concept. Opening entry will never include what? Will never include what? Opening entry will never include what? Guys, opening entry will never include income and expenses.
Income and expense.
Opening entry will not include income and expenses.
Income and expenses, it will always have liability, income, and capital. Sorry, assets, liability, and capital. Assets in the debit side, liability and capital in the credit side. Clear, guys?
Yes, sir.
Yes, sir.
Fantastic. Last question, guys. Last question. We have come to the finale of this chapter. And I will conclude this chapter here. I will not take leisure now. It's enough. This week exercise will be, you have got time till Friday now. Till Friday, what you are supposed to do, all the practical problem in journals you have to complete. Till chapter number 8, all the problems should be completed, guys. Clear? Clear, guys?
Yes,
And
sir.
I made an announcement today that all the Sundays you can take a break from the 5 a.m. challenge, but do not take a break again on Monday. I want everyone to be back on Monday again. Clear?
Okay,
So
sir.
from next Sunday onwards, you can relax for a day, but come back again on Monday so that you guys at least get some free time and you can sleep peacefully on Sunday. Clear?
Yes, sir.
Fine, guys.
Yes, sir.
Illustration 19. The last illustration now. Pay attention, guys. Last one. Illustration 19, they have not given a balance sheet. They have given few items. Now we have to identify which are assets, which are liabilities, and the balancing figure will be capital. The balancing figure will be capital. Okay, very simple, guys. Will just take only 2 minutes for us to complete. Now you have to tell me, guys, cash in hand is asset or liability?
Asset.
Asset. Tell me debit or credit. Cash in hand. Cash in hand will be
Debit.
cash in hand
Debit, sir.
account debit.
Debit, sir. Debit.
How much? 6,000.
6,000.
Cash at bank.
Debit.
Cash at the bank will be
I think,
credit, sir.
Sanjana, you have to go on mute. Lot
Also
of
debit.
disturbance. Cash and bank will be debit.
Debit.
Stock of goods.
Stock is also debit, sir.
Yes, stock will also be debit. Stock account debit.
Machinery is also debit.
1 second. I have not completed stock at all. Let me go one by one. Machinery.
Sir, not in, sir, debit value not in ledger for you, sir. It's supposed to be in debit.
Okay.
Supposed to be in debit, sir.
Fine. Machinery
Okay.
account.
Machinery accounts also debit.
Yes, machinery account is 45,000.
45,000.
Furniture.
Furniture is also debit, and his amount is
Assets, sir,
18,000. 18,000, sir.
18,000. Abdul, debtor.
Debtor.
Sir,
Abdul
assets,
his
sir.
amount is 20,500.
Debit or credit?
Debit.
Debit, sir. Debit.
Debit. How much?
Debit, sir. Debit.
20,500. Now, Neeraj,
Absurd is
1
26,000.
second. Neeraj,
Neeraj
Data.
data with
Sir, it is
26,000.
Neeraj is how much?
26,000.
26,000, sir.
Debit or credit?
Debit, sir.
26,000. Fantastic, guys. Very simple opening entry. Loan,
Yes.
50,000. Debit or credit?
Credit.
Credit, sir.
Lo-
Credit.
Loan, 50,000.
You
Credit.
Amit is also credit, sir.
Yes.
Amount
let
is
me-
6,700.
Yes. To Amit. Creditor. How much?
Right.
6,700.
6,700. See, opening entry means my debit and credit should match, right? But in this question, it will not match. In this question, it will not match. The balancing figure we have to take as capital. Okay. How much is the difference? The difference is 56,700. So to match it, what I have to mention? I have to mention as to capital. It will be balancing figure. Okay. Now, once I put this 93,400, my debit and credit will match. Clear, guys? Any doubt?
No, sir.
Okay. This is called as opening entry. Same narration. What is the narration? Being asset, liabilities and transferred. Asset, liabilities and capital brought forward. Total should not be there in. Total should not be there, guys. When we pass an accounting entry, in accounting entry, there is no total concept. This total is only to make you understand that how we got this 93,400. It was a balancing figure because we did not have information about capital in the question, guys. Okay. This is on which date, guys?
1st April.
April 2026. And one more thing I am missing. Journal of whose journal is this?
Journal of Sunil Brothers, sir.
Sunil Brothers, Delhi. Okay. All this thing mentioned, guys, to get full marks. Do not miss anything. Do not miss anything. Clear? All this mentioned so that there is no loss of marks to anyone, guys. Clear? Now,
sir.
with this, we conclude our chapter number 8 entirely. Any doubt in chapter number 8?
No, sir. No doubt, sir.
And it took us 5 classes, 1.5 hours into 5, 7.5 hours we have spent in chapter number 8. Clear? So that is the kind of extensive classes that we are taking. None of the classes are like I'm not taking 6 to 7 illustrations, or I'm not running through every chapter in just 1 or 2 hours. We are spending close to 7 to 8 hours in one chapter. Clear? And equal amount you guys have to spend. Equal amount you guys have to spend when you are practicing all the illustrations you have to practice, and all the practical questions also you have to practice. Do not leave a single illustration, guys. I keep repeating this because I want my students to be absolutely perfect. Clear?
Yes, sir. Clear.
Fantastic. Now let us see some practical questions, and you will be surprised that you will not find anything new in practical problem. I'm not going to do anything. I will only discuss. Wherever you have a doubt, I will just explain what it is. Okay, let's have a look at all the practical problem, guys. Illustration, page number 8.57. Open your book, 8.57, or you can see the screen also. 8.57, guys. First one, business started with capital. Accounting entry. All of you together, accounting entry.
Cash account debit to capital account, sir.
Capital account. Goods purchased for cash. Any doubt?
No, sir. Purchase account debit to cash
Yes.
account.
Goods purchased from Pankaj on credit. No doubt.
Purchase account debit
No,
to-
sir.
Goods sold to Naresh on credit. goods returned by Naresh. Goods returned by Naresh is purchase return or sales return?
Sales return.
Sales return. For sales return accounting entry is sales return account debit to Naresh account. Sales return account debit to Naresh account. Reverse the original entry. Original entry is Naresh account debit to sales account. For sales return, it will be opposite entry. Sales return account debit to Naresh account. Paid to Ajay as advance. Advance to Ajay account debit to bank account. Clear? Increase in asset. Whenever I pay an advance, it's an asset. Increase in asset has to be debited. Furniture purchase, everyone knows. Sold goods to Sumit for cash, everyone knows. Amount received from Naresh on account and salaries paid. Any doubt?
No doubt, sir.
Okay.
No doubt, sir.
Practical problem 1 is easy. Practical problem 2. I have few transactions which are blurred. Let us see from the book actually. First one, Gurman invested business in cash, invested capital in cash. Any doubt?
No, sir. No doubt.
Yes, sir.
First, till June 14, all are simple transaction. June 15, opened bank account by transfer from saving account. Opened bank account by transfer from saving account. See, whenever it is a transfer from saving account, it's a personal account, right? It's a personal account. From personal account, I'm transferring to business. It is nothing but additional capital. Okay. Bank account debit to capital account. Clear? Remaining transactions are easy. Machinery purchase from Sohan paid to Harish on account. Old newspaper sold. It's an other income. Cash account debit to newspaper sold, or miscellaneous income also you can mention. Cash account debit to newspaper sold, it's an income. Clear? Illustration 3. I don't see anything new. Practical problem 3, I don't see anything new. Question number 4. Question number 4. This we have already discussed. This is on trade discount and cash discount. We have already discussed. Question number 10 and 11. Illustration 10 and 11 were very important. If you revise that illustration, after that illustration, you can complete this question. Clear?
Yes, sir.
Yes, sir.
Bad debts recovered. I think illustration 12 or something. In yesterday's class, we discussed about bad debts. Banking transaction. This also we have discussed. These are all related to goods which we discussed in the last class. Whenever goods will come, purchases account will get impacted. Clear? Drawings of goods means drawings account debit to purchase account. Goods lost by fire means lost by fire account debit to purchases account. Goods given as free sample means sales promotion account debit to purchases account. Goods given as charity means charity account debit to purchases account. Clear? Okay.
Yes, sir.
8. All these are related to fixed assets. Adjustment entries which we discussed today. And the last one is opening journal entry. Okay. So what I'm trying to tell is, I will stop presenting now. None of the questions will look unfamiliar to you. The only request is practice all the illustrations also. Practice all the illustrations also. Then go to the practical problem. Don't jump to practical problem directly. First complete all the illustrations, because all the illustrations we have already discussed. Then you will get a comfort. Once you complete all the illustrations, then only go to practical problem guys. Clear?
Yes, sir.
Yes,
Okay.
sir.
Yes, sir.
So with this,
Sir.
we will conclude our session for today. I will meet all of you on Friday at 6:55 p.m. guys. Clear?
Yes, sir.
Have a great week ahead.
Yes, sir.
And please practice in the morning, guys. Continue to practice. Thank you, guys. See you, everyone.
Thank you,
Thank
sir.
you, sir.
Thank you, guys.
Thank you, sir. Bye, sir.
Thank you.